Hey there, and welcome to WealthWise, the channel that helps you take control of your finances and build wealth. In this video, we are going to dive into the stock market and cover the basics of how it works, as well as provide you with some tips on how to get started as a beginner. Section 1. What is the stock market? The stock market is a platform where investors can buy and sell shares of publicly traded companies. These companies can issue shares of stock to raise money from investors. In exchange for purchasing a share of stock, investors become part owners of the company and are entitled to a portion of its earnings and assets. Stocks are traded on stock exchanges such as the New York Stock Exchange, NYSE, or Nasdaq. These exchanges have set hours of operation, and stocks are traded electronically through brokers and traders who buy and sell stocks on behalf of their clients. It's important to note that the value of a stock can be influenced by a variety of factors, including a company's financial performance, industry trends, market demand, and more. This means that the value of a stock can fluctuate significantly over time, which is why investing in the stock market comes with risks. Section 2. Why invest in the stock market? While investing in the stock market does come with risks, it can also provide higher returns compared to other investment options. Historically, the stock market has provided an average annual return of around 10%, while savings accounts and bonds have provided much lower returns. Of course, past performance is not a guarantee of future returns, and it's important to remember that the stock market can be volatile. However, if you're willing to invest for the long term and can weather short-term fluctuations, investing in the stock market can potentially provide higher returns than other investment options. Another benefit of investing in the stock market is the potential for compounding returns. Compounding is when you reinvest your earnings from an investment back into that investment, allowing your earnings to grow exponentially over time. The longer you stay invested, the more your returns can potentially compound and grow. Ultimately, whether or not you should invest in the stock market depends on your personal financial goals and risk tolerance. It's important to do your research. Consult with a financial advisor if necessary, and make informed decisions about your investments. Section 3. How to get started. Now that you understand the basics of the stock market and why it might be a good investment option, you may be wondering how to get started. Here are some steps to follow. Number 1. Open a brokerage account. To buy and sell stocks, you'll need to open a brokerage account. There are many reputable online brokerages to choose from, such as Robinhood, E*TRADE, or Charles Schwab. Do your research and choose a brokerage that suits your needs, whether that's low fees, educational resources, or a user-friendly interface. Number 2. Set a budget. Determine how much money you're willing to invest and create a budget. It's important to only invest money that you can afford to lose, as there are no guarantees in the stock market. Don't put all of your savings into the stock market, and make sure you have a solid emergency fund in place before investing. Number 3. Research companies. Before investing in a company's stock, it's important to do your research. Look at the company's financial statements, management team, and industry trends. Consider investing in companies that align with your values and investment goals. Number 4. Buy your first shares. Once you've found a company you want to invest in, it's time to buy your first shares. You can do this through your brokerage account, which will give you access to the stock exchanges. When buying shares, you'll need to specify how many shares you want to buy and at what price. Section 4. Key terminology to know. As you dive deeper into the world of investing, you'll encounter some key terminology that's important to know. Here are a few common terms. Number 1. Stock. A share of ownership in a company. Stocks can be classified into different types, such as common stock or preferred stock. Number 2. Dividend. A portion of a company's earnings that's paid out to shareholders. Dividends can provide a source of income for investors, but not all companies pay dividends. Number 3. Market capitalization. The total value of a company's outstanding shares. Market capitalization can help investors understand the size of a company and its position in the market. Number 4. Bull market. A period of rising stock prices. During a bull market, investors are generally optimistic about the economy and the companies they are investing in. Number 5. Bear market. A period of falling stock prices. During a bear market, investors are generally pessimistic about the economy and the companies they are investing in. By understanding these key terms, you'll be better equipped to navigate the stock market and make informed investment decisions. And that's it for our Stock Market 101 video. We hope this has been a helpful introduction to the basics of the stock market and how to get started as a beginner. Remember, investing in the stock market comes with risks, so it's important to do your research and invest wisely. As always, thanks for watching, and we'll see you in the next video.